Well, Mr. Wolf, as you can see when looking at light crude oil futures, we have, for the most part, been trading within this green wedge. Sure, we've dropped down below it, used the bottom line of the wedge as resistance. We've used it as support a few times. When 2020 hit and we had lockdowns, the man dropped off a cliff. But for the most part, we have stayed within this wedge. We're approaching the end of it. So, what do you think is going to happen, Mr. Wolf? Well, what could happen is we will most likely break out of it, either down or up. Yeah, down, possibly, if we go into a recession and demand falls off a cliff. We could break upwards if conflict in the Middle East constrains supply and the economy starts booming, with the Fed continuing to cut rates, as shown by this purple line. Oh, that's very interesting. I wonder what's going to happen. I don't know, but it's something I would keep an eye on. Now, let's change the subject and look at the meme stocks. All right, Mr. Wolf, before we look at the meme stocks, let's look at this. I want to look at the meme stocks now. Chill, buddy. It's okay. Just wait. You can wait a few seconds. You'll like what's coming. Now, when looking at the CPI, the inflation rate, including food and energy, is somewhat at the Fed's target at 2.4%. Core inflation year over year, though, without food and energy, is still 3.3. That's a little bit off of the Fed's target. But the Fed likes to use PCE. I don't know, maybe because it's closer to the 2% target that they're going for. If you look at PCE, which is right here, it's at 2.1%. That is what they like to use to say that inflation has been squashed. But of course, when you look at the inflation rate year over year at 3.3%, you can't help but wonder what would happen if, since food and energy is not included, specifically because it is volatile, what will happen when it spikes again? What will happen to this 3.3 number? Because everything that we own gets touched by oil in some way. It gets shipped to our door, either across the ocean or on a truck to our house or to the store. So those costs will eventually be passed on to us. Inflation has not been squashed according to CPI. And the Fed, as you can see down here, continues to cut. As you can see, the Fed did indeed cut rates by another 25 basis points. It is now at 4.75 as of Thursday, November 7th. Some other interesting data to look at is the fact that unemployment has stayed at 4.1, so that's not too bad. However, non-farm payrolls show that only 12,000 jobs were created last October. That isn't good when people thought that 113,000 jobs were going to be created. Very interesting numbers, wouldn't you say? Yes, very interesting. It didn't look good. I know it doesn't look good. All right, so let's look at the meme stocks. Yeah! As you can see, for AMC, max pain was $4.50. And for GME, max pain was $20. When we look at the options chain for AMC, unfortunately, we closed below max pain, so all of these calls could not hit their strike price. However, when you look at GME, we closed well above the strike price of $20. But they did not close above 25 to prevent all of these calls from hitting their strike price. But that doesn't mean GME is going to fall from here, potentially. And I'll show you why. As you can see from the 2-year chart, we've been kind of trading within this wedge, but then it broke out of it to the downside, and we are using the uptrend from the bottom of the wedge, and we have retested it a few times. However, we were pushed down quite a bit within the last few days, right after earnings, as usual. Yeah, earnings are never good for ANC. I know they're not. But, as I've shown before, we do have a ton of gaps to the upside still. When here, there, here, there. Eventually, when the fundamentals get better, and when the time comes, AMC may very well continue to go up. Now, when we look at the short-term chart, though, things aren't all that bad. At the very last minute of the day on the 1-minute chart, we had a little volume spike, and someone wanted to push this thing up at the beginning. But of course, it was not enough. When you look at the EMAs on a 3-month chart, the 200 moving average continues to come on down. When the 200 moving average finally decides to come down enough for there to be not as much liquidity required in order to push this thing up, I think someone is going to come along, I would think, and try to add enough volume to retest this 200 as resistance. At least that is what I'm hoping. Now, if we go to a 1-year chart, we can see during the last run that we almost tested the 200 EMA. Not quite. Almost. And I think we're going to do that again. And there might be enough volume for it to actually break. And as we know, AMC oftentimes runs after GME does. So, if there's enough volume for this to break the 200, and it takes the 50 EMA with it, we could have a golden cross on our hands within the next few months. You never know. As far as these other stats go, we are looking at stochastics that are kind of down. MFI, RSI is kind of neutral. Nothing too exciting there. Bollinger Bands are continuing to get a little skinnier on the yearly. On a longer time frame, Bollinger Bands are still skinny as ever. When looking at the ADX DMI, on a longer time frame, we are above 20, so that's good. And the amount of momentum that we actually have is kind of so-so. It looks like AMC might cross back down bearish, especially since the MACD is starting to look like it's curling downwards. But that could change real quick. These are all lagging indicators. As far as the volume goes, on a larger time frame, it's not really picking up all that much. It's picking up a little bit, but not a ton. Now, let's look at the good part, which is GME. When looking at GME's volume, it's starting to pick up considerably within the last day. What is really intriguing is the fact that the ADX, which is a momentum indicator, is above 20, and the DI plus is well above the DI negative. It's way up there at 37. That means that there is a lot of momentum to the upside. You have the OBV right here, which indicates there is a ton of buying happening. MACD has curled upwards. The only thing I don't like is that RSI is almost 70. You might see a slight pullback and retest. But the thing is, if we go into a gamma squeeze, the market maker who has to buy shares to hedge, they don't give a crap at what the RSI is. All they know is that to stay delta neutral, they need to buy shares. That's all the market maker cares about. They make money from premium, not from price change. Bollinger Bands, they're starting to expand as GME is starting to go up. That is good. If you look at the stochastics, yeah, MFI, it all looks overbought. But again, if we start going into a gamma squeeze and the market maker has to buy shares in order to accommodate the fact people might execute to their call options. They don't care about these stats. Volume has definitely picked up within the last 3 months for GME. Right here specifically, today. Unfortunately, as you can see, we did not close above the 25 strike price, like I said earlier. We closed very close though. If you go to the daily, you can see that they tried really hard to bring it back up, but they just couldn't do it. And the gaps, well, I can get rid of this because this gap has long been closed. And there is, according to some people, a gap down here, but I don't really take that nearly as seriously because it's a partial gap. A wick from the previous day intersected with the opening price. So I don't really consider that to be too much of a big deal compared to like a full gap where no wicks cross each other. Partial gaps, I don't think the market takes partial gaps as seriously. So I wouldn't be too concerned about that at the moment. As far as the chart goes, what do you say, Mr. Wolf? I think it's looking really good. Yep. Now, as you can see, volume kind of died down a little bit after that last bump here, but that means it's going to kick back in as it's done every single time. We have resistance at 25.50, about right here. If we can break that, we're going up to 29.36. If we can break that, the sky is the limit again. We were trading in this blue wedge before we decided to gap down. And now we are using the bottom of that wedge, and we've retested it a few times. And hopefully we have officially broken inside of this blue wedge again. That will be great if that is the case. And that is about it for GME. It's looking really mighty good. And the fact that we still held around the 25-ish area without actually breaking it, and with the momentum indicator like the ADX going crazy, we could see something very crazy come Monday. You never know. You never know. The cat might tweet again. Oh, what if he does? He might. But in any case, aren't you excited? Yeah. The market is open, Mr. Wolf. It is time for you to show me what you can do. No, bring up the box and the tape. Okay. Not a literal box and tape, Mr. Wolf. Do you understand what the box and tape is? Yeah, I do. Tell me. Okay. The box and the tape is this. And as you can see, this is the level 2 order book data, the box, and this is the orders that are coming in right now. That is called the tape. Good, you got it right. I was just testing you. Great. So now, go ahead and do a trade, Mr. Wolf. Seriously, go ahead and do a trade. I'm kind of tired, you know. Maybe we should do it tomorrow. Tomorrow's Saturday. I'm tired. And the numbers, they move so fast. And, and, I can't keep track of them. It's so confusing. I mean, look at it. Yes, I know. You have your bid and your ask, and then you can see how many shares it takes to potentially fill the order until the price moves up. Whoa. Rain, you got it right. That's exactly right. Yeah. So you have to wait for the offer to do a trade. And I don't feel like it right now. Are you sure you even know what you're doing? What school did you go to again? I went to like some kind of business school. But I never graduated. I did a student. You been a student. Yeah. Well, how about that? Well, are you sure you're really the expert that you said you were? The Wolf of Wall Street. Uh, yeah. How about that? Uh, I have some learning to do. You have some learning to do. Well, how about you go and learn, and I'll take care of this for a little while, and I'll train you, and you can actually, perform while I'm gone, maybe. Mr. Wolf, you still haven't done a trade, and now the market is closed. Uh, I'll make a deal with you. In the disclaimer at the beginning of the video, I'll remove the fact that you're an idiot from that if you can learn how to do a trade. Yeah, I can't concentrate. The tape in the level 2, it moves too fast. I I need some cooking lids. What? Are you sure? Don't get suspicious around me. Ah, get out of here, DLJ! Don't throw lobsters at me. Dude, you've been watching way too many movies, dude. Way too many movies. That's not typical of real life. Cloak and Ludes. Don't be taking an influence from media, dude. Now, you'd better learn how to trade. Yeah, I don't want to be called stupid in a disclaimer. I know you don't. Well, then you'd better get up off your butt and learn. Okay.